And we're joined this morning by Gautam Shah, the founder of Goldilocks Global Research. And what an apt moment to be speaking to Gautam. Gautam, thanks so much, as always, for taking the time, and good morning. The question is, with this back and forth that we've constantly seen, and I think the window for that back and forth has also shrunk quite dramatically based on what we saw Friday to today. How would you trade, if at all? What is the strategy that you would employ?
Good morning. Well, my experience tells me that stock markets are the best judge of geopolitics. And I think the market saw the possible problem early March, and we had that big fall. And now you have the Nifty recovering 2,000 points, which just goes to show that the market is a lot more resilient and a lot more comfortable with all that's happening in the world. I mean, the fact that US market indices, the S&P 500 is at lifetime high tells you a lot about what markets can do and what they have done, because they really believe in discounting. You know, when the situation started, it was all about markets reacting to what had happened. Now it's all about understanding the intensity. And I think the market believes that the peak intensity of this entire geopolitical situation could be behind us, and that's probably the reason the market is looking a lot more comfortable. I think we've rallied quite a bit. Most of the positives of the situation, I think, are in the price. So I don't think on the Nifty we are going to do anything special from here. 24,300, 24,600 are important resistance numbers. I don't think we are going to cross that in a hurry. And on the downside, I think 23,500 is going to be a sort of important support. So we are going to stay in this band of about 23,500, 24,600. But in this very period, I think stocks, sectors, and themes will continue to do well, because what was earlier a major headwind is not anymore. So in that sense, I would be a lot more constructive, but I would be stock specific. So use the volatility to your advantage. If there are dips, use it as a buying opportunity. I think the worst was over at the recent low. We will gradually move higher. There are a lot of other issues that our country is still looking at. So it's not about the index and the large caps, and it's about the broader markets.
Gautam, hi, good morning. It's about the broader markets, not about the index and the large caps. So you are not really in that whole camp of people who are looking at the HDFCs, ICICIs of the world. You're looking at beyond that, and what are you finding interesting?
Well, Tamanna, to be honest, I've not been in that camp for a year, and I think that's saved us to a greater extent, because there is no return on the Nifty. I mean, it's really not gone anywhere. There is no point looking at some of these top names when you know that India is facing a lot of other issues around AI, around consumption, around the economy, around valuations versus the rest of the world. I mean, these are all issues that are still at the forefront. So I don't think the Nifty is in a position where it can do anything special. So top 100 is not something which I'm very excited about. But look at the microcap 250 index, for example. At the lows, it was at 19,000. Today is at 22,300. That's a 15% move on that index in a matter of 3 weeks. So that's where the opportunity is. And I think microcap and small cap, I think, will outperform the Nifty for the rest of the year. Now, how do you play this? You can play it by buying a basket, which is probably best for a retail or an HNI, without really putting your mind to stock picking. Or you can look at select pockets of the market which have outperformed. And I think for us, metals, PSU, energy are three baskets, which we have been recommending and we continue to like for the medium term.
Gautam, you hit a raw nerve of sorts, if you will. Good morning. Simply because fundamentally it seems to be a no-brainer that energy and energy transition, or both, like in all forms of energy, thermal and non-thermal, will be mainstays. It was probably true before the conflict as well. I think the conflict has only reinforced that belief, both in terms of the companies, maybe the government, and the market players as well. What though looks promising, because this ecosystem is very vast, right, Gautam? I mean, fundamentally, there are green energy producers, there are thermal power producers, there are these suppliers, T&D players, what have you. There's a very wide ecosystem. What looks good to you?
See, this entire energy theme has been a great story for the last 1 year. I think fundamentally, as you rightly said, there was always a case. But in stock markets, there's always a right time for everything. And now with this geopolitical situation that took place and the kind of impact that it had on our country in just 10 days, I'm sure the government and everybody realized that there is a problem and we need to correct it. And I think the market saw that. And I think the market saw that 3 weeks back, and that's probably the reason so many energy stocks have come back so strongly. Disclosure, we covered it at Goldilocks as well. And I think this is a theme that's going to stay for the rest of the year. The NSE energy index is just broken out, 5 or 7 days back. This looks like a mega trend. I think a lot of stocks will end up delivering anywhere between 30 to 50%. Some might even double. And I think that's where commitment should be, because I think the government support is going to be there. The charts are very well placed. The relative strength, is all there. Now, what to buy? I think I would still stay with the green energy producers. I think it will all trickle down from there. But when a theme does well, everything is a beneficiary. I mean, we saw that with chemicals 4 years back. Everything in chemicals did well and got into a massive bull market. So I think the entire space will explode. If you are somebody who can get into stock picking, you can go to the small cap and micro cap within energy, or you can just stick to the top 5 or 7 bets, which are quite in the open, and I think they will do really well.
Okay, all right. I've asked you this in the past, Gautam, and just from the perspective of one of the most volatile moves in the recent past, and that is crude oil, right? Do you have an opinion on the way that Brent is moved, and do you have any idea about the direction? Because what we saw on Friday was a very sharp move on the downside. The moment that there is even a semblance of a positive update, there's a very sharp move on the downside. So what's keeping it where it is right now?
Well, it's quite obvious with what's happening in the world, it's keeping it where it is. And I think it's going to remain this way for a while now, because I don't think you have a result. You don't have a result to the conflict as yet. It goes back and forth. And obviously, in this kind of an environment, you can't have crude settling down. For 2 years, crude went nowhere. Nobody really talked about it. It was languishing in that band of about $65 to $85. Talking about NYMEX crude, and then this situation came up, and that led to a big move towards close to 120, and now it's back around 85-90. I think it will stay elevated, which I think in some sense is a problem for India, and therefore Nifty and large caps is another reason why they might not do as well. More likely that they stay in a band of say 80 to 105, but I don't think the movement in crude is a lead indicator to what happens to the stock markets. At least that's not worked page by page in the recent past. So I would not look at it with such close metrics. But I think what has happened to USD...
Sorry, I'm going to just interject on that point, because the general understanding is exactly that indicator, that crude is a lead indicator of how equities is going to behave. You're saying that it's been decoupled?
I'm not saying it's decoupled, but this logic was written in the textbooks in the 70s and 80s. And I don't think you can go by that logic, just one logic to understand equity markets today. There are too many other factors. Who had factored in domestic liquidity? Had domestic liquidity not been there, there was a very clear direct correlation between crude and, equity markets. So I'm just giving you food for thought. And that's probably the reason we are looking at a lot of...
Sorry, I'm saying forget about 70s and 80s. Let's talk about the last 6 weeks in the Strait of Hormuz. Crude hits 100, and temperatures here go up as well. So despite the domestic liquidity, are you saying in the current situation, forget about the textbook definitions, crude is not something that is going to impact us as much as it's being thought?
Not at all. Crude will definitely impact us in the medium term and long term. Market realizes that. And that's the reason we are still one of the underperforming markets in the world in terms of the overall recovery that has happened in the last 3 weeks. S&P 500, as I said, is today at 7,100. Look at European market recovery. Crude is definitely a problem. All I'm trying to say is don't try and judge crude movement on equity market movement on a day-to-day basis. If it stays elevated, it's definitely a problem for India long term, but I don't think it's going to be a case for markets to collapse.
Okay. Yeah. Also puts into question that in normal economic times, a lot of the other indicators become very, very relevant. These days, the indicators probably have to react a lot more to the Truth Social posts, and now and the posts on X by the Iranian side as well. So that is also playing quite a bit of havoc. Gautam, I'm inclined to ask you about gold. After a phenomenal 2025 or better part of 2024 and 25, it's kind of gone quiet, almost sedate. What's happening here?
I'm happy it's gone quiet because $1,700 became $5,400. That's not normal by any standards in a matter of 18 months. It needed that consolidation. It is in that consolidation phase. It's not going to fall big. I think it will see its rallies from time to time. And I think it'll probably stay in that band of, say, about 4,000 on the downside and 5,300 on the upside. It needs that consolidation. I still feel that silver is the bigger opportunity. We've recommended clients to take positions in silver every time it gets close to 65. I think it will stay in that large band and it will trade with the bullish buyers. But gold and silver is an opportunity. There's no doubt about it. It's just that you have to now buy at the right price. But the other big theme, which I'm also a big fan of, is hard assets. And I think, as you know, I've said this on your channel multiple times, the metal space looks very interesting to me. It is, as we speak, at lifetime highs. Look at what ferrous and non-ferrous metal stocks have done in the recent past. And I think the best is yet to come for metal. So there's a big move, even from current levels, for the entire metals pack.
Non-ferrous both, right, Gautam? Very quickly.
That's correct. See, non-ferrous already had a mega trend in the last 1.5 years. Now the ferrous side, the iron and steel producers are making a comeback.
Yeah.
So that's also a big opportunity going forward.
Yeah, by the way, like we said in the morning, steel spreads, viewers have really shot through the roof. So keep this cohort in mind. Gautam, great getting these lead indicators from you, even if crude may not be a lead indicator anymore right now. And people will have both sides of the opinion there. But thank you so much for joining in and talking to us today.